Right, so as you can see, I've got the sterling cable chart on the screen at the moment. Makes a lot of sense. There's been a pretty big move in cable. I'd be surprised if you missed it, but there's been some pretty big news today that there's going to be a snap general election in the UK to be held on June 8th, so really not too far away. We're looking at 2 months away, and so obviously this has caused a bit of a surprise in markets. As you can see, the reaction's been positive in cable, and that's pretty in keeping with what we've been saying in these webinars for a while, that we see the biggest risk to sterling being to the upside, in that the Brexit risks are pretty much baked in. Now obviously that could prove to be wrong, but this is a little confirmation that we're seeing at the moment, and I think this is the general idea here, is that this will the result of the general election. If you look at polls, is more than likely going to be a strengthening of Theresa May's position, a bigger majority for the Tories. Tories typically a bit more of a market-friendly party, so I think markets moving to some extent on that. And I think we've been writing for a while that the reaction markets to sort of from a Brexit perspective has changed recently. It's more of an acceptance that Brexit's taking place, and now the pound reacting more to whatever can be the most positive for the UK in terms of deal. So if I zoom out here on a daily basis, you can see that we're at pretty critical levels on the cable chart. Basically, we've been in a 120 to 127 zone for quite a while now, and we're right up at 127. So I've got the horizontal level in here. We can also show that we're teeing up a break of a potential trend line here. You can draw it from this high here, or you can draw it through these high down here. You can see that depending on where you put this, depending on where you see the kind of false breaks. There's been a few tests of this horizontal, and this breakout here, touching that, moving up to that 127 point, but it looks to be breaking this downward sloping trend line. So momentum definitely to the top side at the moment. The shorter term moving average, as you can see, above the longer term. I should caution that we're still in a range. We haven't actually broken out above 127, not even taken out this peak here from January, and certainly not taken out the peaks from November. So we're not quite out of the hole yet on sterling, but I would say today quite dramatically increases the chances we're going to get a breakout to the top side. But you have to be, it's never going to be in a straight line. Equally, while we're talking about the pound, worthwhile switching over to euro sterling. It's not something I always cover, but again, I think here we're breaking through a confluence of potential support levels. If you draw up the support here, you can see that this trend line has we dipped through it over the last couple of days, and then we've attempted a rebound off the support. If I ditch that line here, but sort of extend this line through here, you can see there's sort of this initial couple of touches, the false break here, and then the attempted bounce off the support here dramatically failed on this announcement from Theresa May. And so now we're moving down to this support, but to my mind, again, it looks a bit like that cable chart, obviously mirrored. It looks like cable's breaking out, looks like Euro's going to drop to the downside against this against the British pound. Now, naturally, the relationship that's been in place for a number of months now, really since Brexit, I suppose, is that the UK 100 has a sort of opposite relationship because of the many multinational firms listed in the UK which benefit from a weaker sterling. So if sterling is pushing to the top side, then naturally here we are. Here's the FTSE 100. It's a 4-hour chart, so looking a little bit overly dramatic, but nonetheless, you can see we're dropping to the lowest levels in a while here. We took out this pretty hefty support at around the sort of 7,260, 7,250 area. But we've rebounded above it. Now, obviously, there's two competing factors here. Potentially, we would argue, obviously, a snap election. We don't know the result yet. Potentially more uncertainty on the cards, but we actually see this because of the strong likelihood of a stronger Tory majority, a weakened Labour, less of an opposition, less chance of any future date from Parliament voting down any Brexit negotiation plan. Just means probably reduced uncertainty, and so that's actually good for the UK stock market. So it's that political uncertainty effect on investors' desire to invest in the UK versus the currency effect. So that's why we've seen the drop in the FTSE, but we've also seen the rebound off the lows. Now, if we're talking more broadly about indices, I will get to that in just a minute, but worth just returning to the euro against the dollar. This is the 4-hour chart. If I just jump to the daily chart here, sometimes it's worth looking on the daily chart just to kind of get a better idea on the kind of peaks and troughs that are most significant. And this little rebound, after this sharp decline, we've got a little rebound there, and actually that's proved to be a fairly decent source of resistance, this downward sloping line after that first bounce. So you don't see that so easily on the lower time frame charts. Indeed, it's drawn a little bit differently here, but this is actually potentially an inverse head and shoulders pattern where we've got a sort of extended left shoulder, the head, and the right shoulder, and then again pushing out here, pushing above this resistance over here. Looks like could be a breakout to the top side. Obviously, that moves in sync with a breakout in the pound against the dollar. Why is the dollar pulling back? Well, we had seen some early strength until this Brexit news, because we heard Secretary Mnuchin from the US saying that he actually supports a stronger dollar over the longer term, but he was a bit shrouded in his wording, and still doesn't completely get rid of the idea that actually Donald Trump favors a weaker dollar in order to spur US manufacturing. So dollar's still looking a little bit soft here, and that's exemplified pretty well in the dollar yen. We've had a bounce in dollar yen, but we're still of the perspective that actually these bounces could be opportunities to sell into. So if we look at, we've taken out this support here. We're very much in a downtrend scenario. So this is one of those times where you've got to be aware of the trend. The longer term trend is to the downside still. Probability favors further moves to the downside, but we have had a bullish reversal pattern on the daily chart. So potential for a little uptick in prices. We've sold off from the first attempt at an uptick, but still probably chance for a bigger move, and then we look for those reversals again, looking for this trend to continue. The obvious one would be back at this broken support turned resistance if we were to get there, basically around the 110 level. But oftentimes it just won't get there in a strong breakout. And if we look at this, if we kind of zoom this chart out a bit, we can see that we consolidated for a while, broke down, consolidated again, broke down again. So the downtrend's in quite good condition at the moment. And oftentimes we won't get back. In this case, we had the support, we dropped a little bit, broke, and did retest the support as resistance. On this occasion, we might not be so lucky. So then, getting back to the indices again, I've had these Fibonacci levels on the chart for a while. It worked for that initial rebound. So these lows up to the record high, the 50% worked pretty perfectly. We consolidated for a while and then a false breakout. So this was a bit of a warning sign to the downside, and indeed we did turn lower, but we haven't taken out that low from late March. And indeed we got another rebound from that 50% level with a bullish engulfing pattern on the daily chart. So longer term trend is up, but certainly not to be ignored that we've dropped down through this 50-day moving average, which we haven't done so for quite a while. If I zoom out the chart, you're probably all aware that we actually we haven't closed below it since the US election. We've probed below it and finally closed below it last week. So this is one of those situations where the longer term trend is still up, in my opinion, but it's clearly lost a lot of momentum. And so, you know, when you're buying the dips, you've got to be aware of the fact that obviously the dip can continue lower, but you've got the support of the longer term trend. There is a bullish engulfing pattern here off a support. You know, that's a fairly decent bullish signal. If you're looking for a little bit of extra confirmation, then I thought I would have done this, but you basically just extend this trend line down a little bit lower. And you can see this has been working pretty well. So if we get a push above this declining trend line, that's another technical signal. The short-term downtrend has ended, and they were actually pushing back to the top side. So if you want a little bit further confirmation beyond this bullish engulfing from a support, then that'd be one to go for. You know, the fact that we did drop below those moving averages, I wouldn't call critical, because it's not like we flew through it. We kind of grinded below it in a sideways motion, but nonetheless it's a little bit of a warning sign that markets could be in for a bigger correction. If we turn our attention to Germany, now I typically don't look at the French index as much, but obviously that's a little bit more potent at the moment, or for this week, in the lead up to the French election, the first round of the French presidential elections this Sunday. European markets have turned lower today for the most part. You can see that here, and it's apart from the FTSE, which is getting hammered by that stronger pound, it is the French market that's suffering more so than the German market. The German index does drop on the European political uncertainty, but if you're looking for a haven within Europe, then that would be Germany. It's the strongest economy. So if you want to stay in Europe but you're shifting your money out of France, you'd probably put it in Germany. So while the French election is causing some uncertainty, it's causing more of a sell-off in France than it is in Germany because of the reason I just mentioned. Again, the trend pretty strongly higher. And we're basically, we've been grinding lower, no real determination to push to the downside yet, still above that 50-day moving average. So, you know, the outlook still looks decent for the Germany 30, and, you know, if you're looking to buy the dips, you know, you're kind of coming close to the opportunities at the moment. The fact that we had a bullish engulfing yesterday, and now that we've got a bearish engulfing, unwinding that would suggest to me that maybe there's a little bit more downside to come if we finish the day as we are now. It depends how the result of the election goes. You know, if you expect Emmanuel Macron, more of an establishment, not an establishment figure, he's still a bit of an outsider, but, you know, still slightly more mainstream policies. If he comes out ahead in the weekend's election, then you would imagine that buying in the dip before that would be a worthwhile pursuit. Obviously, if Marine Le Pen does a bit better, then the dip's probably not over, and then you're kind of getting in a little bit early if you're buying in this week. Best as ever to follow the price action at the moment. It looks like the market's attempted to bounce, failed, probably heading down to retest this support down here at around 11,850. I should mention that obviously if there's any questions on other markets or anything I'm talking about here, please send them through the Q&A box. On that topic, it's probably worth me checking. Okay, yeah, please do just send a chat or a question, and you know, I'm happy to go into that in more detail. Moving swiftly on to Brent crude. I have to say this is one where, you know, our chart analysis was was pretty bang on, but our maybe we relied a little bit too much on the fundamentals for our general outlook here. We never turned bearish on oil, but I did think that maybe this dip could lead to a bigger decline. It still could, just looks a bit less likely at the moment. So we highlighted in a previous snapshot video this double bottom. We had this objective here which has hit quite nicely. There was a reversal pattern. I thought maybe that could be it, but we actually rebounded the next day, and we've moved up high, and we're just kind of hovering around this peak, which basically set off that decline in Brent. We have dropped through some kind of short-term support here, so if you are a bearish predisposition when it comes to oil, then there's a fairly clear-cut piece of support that's been broken there. Just be savvy to the fact that we're coming down to that. If I zoom out a little bit here on the 4-hour chart, you can see this level that we broke through. That is also the area, the extension of the double bottom. It could potentially be a support to trigger further gains in the market. So our oil market looking a bit soft, had a nice rally. If you are bearish on the fundamentals, then this could be an opportunity today. We're seeing a bit of a break to the downside. Trend's still pretty well higher though, so you're kind of going counter trend if you are selling here. The shorter term moving average is admittedly below the longer term, but in this kind of environment where we're seeing kind of sharp drops, sharp rebounds, it's more of a range, and the moving averages have less meaning in those kind of situations. But potentially another argument to say that maybe we put in a little short-term top within a range. Again, you could make that as a justification for going short here. There is a bearish engulfing at a resistance area, so you're not breaking all the technical rule books here, but the momentum still looks higher. So probably our preference would be looking for some area to reverse this dip in the shorter term. And last but not least, let's look at the gold market. Obviously, gold loves uncertainty, and we're seeing plenty of it at the moment with all the the saber rattling from Donald Trump towards North Korea. And obviously North Korea very much back to Donald Trump, and the situation in Syria. Stock markets have seen minimal reaction. I think what's going on there is that people are still positive on the stock market, but they're hedging their bets through the gold market. And again, we're pushing up to multi-month highs in gold. We've unwound a lot of that Donald Trump-based sell-off in gold, and obviously it's being helped by the fact that the dollar is sliding as well. So bit of a bearish pattern here on gold, but we wouldn't necessarily, I wouldn't categorize that as any particularly key area. Debatably, these previous peaks over here, I don't think it falls at any particular Fibonacci level from my memory, and in fact I think we've broken through the 61.8 as I remember. Yeah, so we've broken through the 61.8, having a bit of a pause midway between the 61.8 and the 76.4. So still it looks to have moved into a territory where it's no longer so much in a retracement of this move, but maybe a complete reversal. So we're still quite positive on gold. Maybe this little pattern in the short term provides a better buying opportunity lower down. Or should we get down to this previous peak, then we look for some short-term reversals in around that 1265 area, and potentially around this big spike here will be another area to get in. I mean, the fact that we broke above this resistance to me is bullish. The fact that we've got above the 61.8 retracement is bullish, but obviously we've been going up for a while now, so it certainly wouldn't be a surprise to see us drop lower, but it's not. You've got to act on probabilities. So that's it. I think that's all to cover here. That's how charts are looking. We've obviously got the big events being a UK election now, set on June 8th. That's going to cause all sorts of movements in the British pound over the next coming weeks. The immediate one that may come into focus again will be the French election, the first round of. That's held on Sunday. And we do have US earnings season kicking into full gear as of this week, with some of the big banks reporting earnings too. So all that to consider. Obviously, the geopolitics again could throw markets for a wobble. So good luck trading. Lots of opportunity out there. And thank you very much for watching. Jasper signing out.